Hello and welcome to today's video. Today I will be discussing some highlights for Elevance Health. As some of you know that follow me from before, that this is one of my new positions that I built. As the new earnings is upcoming in the next 2 to 3 weeks, I think it's good to get refreshing in terms of the latest earnings report and some new highlights. So let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Price action. After dropping to fresh 5 years lows not too long ago, the stock has bounced back nicely and is now trading in $310 to $330 range, and that represents around 17% rebound from its recent lows. Now, as you probably know, the health insurance sector has been under heavy scrutiny recently, mainly because of uncertainty around ACA subsidies and other regulatory cuts. But interestingly, after the wave of pressure, some big players including Berkshire Hathaway were reported to be scooping up shares of certain insurers like United Health. Moves like this tend to lift sentiment across the board and can benefit the entire sector, Elevance included. Now I will discuss some highlights from their latest earnings report. Elevance Health now expects 2025 GAAP net income per diluted share to be approximately $24.1 and adjusted net income per diluted share to be approximately $30. At the recent healthcare conference, they reaffirmed its EPS guidance. One notable takeaway from their latest earnings report is the ongoing pressure on operating margins. Over the past 6 months, margin declined by 110 basis points compared to the same period last year. Furthermore, during a recent healthcare conference, management said that they do not anticipate an improvement in the second half of the year, and benefit expenses will be elevated at around 90%, and this indicates that margin headwinds are likely to persist despite the initial growth in operating revenue. Now we can check our models, like the models that I discussed before on X in my articles. Looking at valuation, Elevance has traded at an average PE ratio of 16.86 over the past decade. If we apply that historical multiple to the company's recent low of $280 per share, it implies a potential upside of roughly 30%, pointing to a theoretical fair value of around $363. Next, considering the price to sales ratio, the picture appears similar. At recent lows, Elevance was trading at multiple of just 0.33 compared to its historical average of 0.64. This gap suggests an upside potential of nearly 50% from those depressed levels. Lastly, when we look at the price to operating income ratio, the 10-year average stands at 9.88. Applying this multiple to the company's recent low suggests a potential upside of about 28%. Implying a fair theoretical price of $359. Now, if we bring these valuation measures together, the average of the three approaches points to the theoretical fair value of around at least $380 per share. From the recent lows, that would imply an upside of roughly 26%. Even from the current level of $320 per share, there remains about 16% potential upside. Technically, such a move would also align with a reclaim of 200-day exponential moving average, which could open the door for further gains if that level is successfully held as a support. Another factor that adds to Elevance's attractiveness is its consistent capital return policy. The company continues to pay a regular dividend, which stood at $1.71 per share in the second quarter. In addition, Elevance repurchased 0.9 million shares during the latest quarter at a weighted average price of $410. These initiatives highlight management's commitment to returning value to shareholders throughout dividends and buybacks, independent of the stock's price performance. And now make some conclusions based on this video. To sum up, from a technical standpoint, the company has rebounded about 17% from its recent lows, driven largely by strong institutional interest. Margin pressures, primarily tied to elevated benefit expenses, remain a headwind, meaning further upside will depend on Elevance's ability to adapt to these conditions and potentially on additional government support. Valuation models still point to remaining upside, while buybacks and dividends dividends add an extra layer of attractiveness for investors. Macro pressures could weigh on the stock in the short term, but in my view, the long-term outlook remains positive. Healthcare has always been and will continue to be one of the cornerstones of human society, even if most of us only begin to appreciate its value when it becomes personally necessary. Okay, this is it for today's video. Yeah, so if you like this video, subscribe and like means a lot, and what can I say? Till next video. Bye.